All right. My name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping you out of jail. Right. So he has a situation that's come up recently as I was working with some clients. You have a scenario where you have a couple that lives together, but they're not married and they have a child. So cohabitating, not married, with children. And when they go to file their taxes, a question comes up as far as how each person should file the taxes, right? Because just a quick refresher, if you're not married, right, any married status is off the table, but there's a child, a dependent that's involved. So normally when there is a person that is single or not married that cares for a child, you are reserved the head of household status, which puts you in a favorable tax bracket because the premise is that you're caring for a child, right? But in this instance, if both parents are there and they're caring for the child, both parents can't claim head of household. So the dependent can only go to be assigned to one individual. And because you're not married, you have to file separate tax returns. So the question becomes who gets to claim the child so that they can claim that head of household status. So I often get hit with who should claim the child so that it works out in their best interest, or at least collectively. So I've had a couple clients in this scenario. Normally what you can do is if you have multiple kids together, then each of you can claim one, and that way you can both have the head of household status. However, in the event that there's only one, normally the way it shakes out better is that if the person that makes the least amount of money between the two parents can usually get a pretty big benefit if they're claiming the head of household. And if one of the parents makes a very low income, let's say $30,000 or less, then it's definitely advantageous because now you're in the territory of claiming without a household. Now you're in the territory of the earned income credit where you can actually get money back on top of taxes that were withheld from any income that you made. So that can prove to be very advantageous if one of the parents' income is rather low. If the incomes are relatively even, then you may have to do some math there because there's nuances dependent upon the structure of your income. Is it all W-2 income? Is it self-employed income? So you have some scenarios where you just simply have to do the math to see how it shakes out. But the rule of thumb is that normally the parent with the lower income would make the head of household claim, and then the other parent would do the single status. And that's if it's skewed. So it's pretty short and simple. That's just a quick tidbit. And if you find yourself in that situation, you should just go with the person with the lower amount of income to make that claim. So collectively, it may work out better between the two of you. All right. The other parent is going to pay a bit more. But again, if you aggregate your income, aggregate what you're paying in taxes, that should normally work out best in your favor. All right. So relatively short today. Hope this was helpful. So that's all for now. If you have any more questions about this topic or any other tax or accounting related questions, feel free to reach out. I'm happy to help. All right. That's all for now. I'll talk to you in the next one.